If you bought BBRI 3 years ago for the 7% dividend yield, like most Indonesian late starters did, you have lost 57% of your money. 57%. Meanwhile, the boring American dividend ETF paying you only 3%? It made retirees 70% richer in the same period. Same starting capital, same 3 years. One path lost money, the other nearly doubled. Today, I'll show you exactly why this happened, and in next week's V12b, we'll build the portfolio that fits your situation. For Indonesian late starters, building a dividend portfolio is one of the most popular paths to retirement. The idea is simple. Own assets that pay you regular income and use that income to live on when you stop working. But there are two very different ways to do this in 2026. Path 1. Buy Indonesian blue-chip dividend stocks on the IDX. BBCA, Telkom, BRI, Astra, Bukit Asam. Household names with yields ranging from 6 to 15% right now. Path 2. Buy U.S. dividend ETFs through interactive brokers. SCHD and VYM are the two most popular choices, paying 2 to 3%. On the surface, the choice looks obvious. Go with the higher yield. But the data from the last 3 years tells a very different story. Let's start with the Indonesian side. These are the 5 most popular dividend stocks on the IDX and their trailing yields as of June 2026. BBCA, Bank Central Asia, yield around 5.8 to 6.5%. Annual dividend of 281 rupiah per share, paid semi-annually. Payout ratio 65%. Telkom Indonesia, TLKM, yield around 6.7 to 7.4%. Annual dividend 212 rupiah per share. Payout ratio 89%, the highest in 5 years. BBRI, yield around 9.4 to 12.6%. Annual dividend of 343 rupiah per share. Payout ratio 85%. Astra International, ASII, yield around 6 to 7%. Annual dividend 406 rupiah per share. Payout ratio 52%. Bukit Asam, PTBA, yield around 13 to 15%. Annual dividend 332 rupiah per share. Coal company, yield is cyclical. Looking at this list, your instinct says go straight for PTBA or BBRI. Where else can you get 13% yield from a major Indonesian company? But here's the question you need to ask before you click buy. Why is the yield this high? Here is the brutal truth about high dividend yields right now. Yield is calculated as dividend divided by share price. So, there are 2 ways for yield to go up. Either the dividend goes up or the share price goes down. Guess which one happened over the last 3 years? BBCA hit an all-time high of 10,775 rupiah in 2024. Today, it trades at 5,075 rupiah, down 53%. Telkom peaked near 4,600 rupiah. Today, 2,760 rupiah, down 40%. BBRI peaked at 6,350 rupiah. Today, 2,740 rupiah, down 57%. Astra fell from 7,500 to around 4,570, down 39%. Bukit Asam peaked above 4,400. Today, 2,600, down 41%. So, if you bought these stocks 3 years ago chasing yield, Your dividend income might have totaled 21% over 3 years, but your capital lost 39 to 57%. Your net total return was deeply negative. This is the universal yield trap. When a stock pays 13% yield, the market is usually telling you something is wrong. PTBA's profit fell 59% in the first half of 2025 because global coal prices collapsed. And the Indonesian government's Danantara policy now requires state-owned miners to channel their sales through the Danantara holding structure, reducing PTBA's pricing autonomy. The market is pricing in not just weak coal, but a permanently changed business model. For telecom, the story is even more structural. Traditional telecom revenue from PSTN landlines and GSM voice calls has been disrupted permanently by WhatsApp, FaceTime, and Telegram voice notes. Indonesians simply do not make billable voice calls anymore. Telkom's profit dropped 10% in Q3 2025. ARPU keeps declining. This is not a temporary cycle. It is the slow death of legacy telecom revenue. BRI faced government pressure on executive bonuses and slowing microcredit growth throughout 2024 and 2025. And Astra International, the conglomerate behind Toyota, Daihatsu, and Honda in Indonesia, has been hit by something equally structural: the rise of Chinese electric vehicles. Since BYD entered the Indonesian market in January 2024, followed by Wuling and Chery, traditional internal combustion engine sales have come under serious pressure. The EV transition is permanently changing the Indonesian car market. The yields look juicy now, but they are a snapshot of stocks that have already been beaten down for very specific structural reasons. Now let's look at the alternative: U.S. dividend ETFs through interactive brokers. SCHD, Schwab U.S. Dividend Equity ETF. Current yield around 3.2%. Expense ratio 0.06%. Holds 100 high-quality U.S. companies that have paid dividends for at least 10 years. The dividend has grown by an average of 11% per year over the last 3 years. VYM, Vanguard High Dividend Yield ETF. Current yield around 2.2%. Expense ratio 0.06%. Holds over 450 large-cap U.S. dividend payers, much broader diversification. Both pay dividends quarterly in U.S. dollars. Both are extremely cheap to own. 6 basis points means $6 per year for every $10,000 invested. Now, on yield alone, these look terrible compared to BBRI at 11% or PTBA at 14%. But yield is only half the story. The other half is what happened to the share price. SCHD delivered a 4.6% total return in 2023, 11.7% in 2024, and 4.3% in 2025. Cumulative 21% in US dollar terms. VYM delivered 6.6%, 17.6%, and 15.4% in those same years. Cumulative 45% in dollar terms. But for an Indonesian investor, those dollar returns get amplified by something else entirely: the currency. Here is the part that changes everything for Indonesian investors. Over the last 3 years, the Indonesian rupiah has weakened against the US dollar by approximately 22%. Today, in June 2026, the USD to IDR rate sits near an all-time low of 18,000 rupiah per dollar. 3 years ago, it was around 14,800. What this means: Every dollar of US dividend you receive today is worth 22% more in rupiah than 3 years ago. And every dollar of capital appreciation in your SCHD or VYM holdings translates to even more rupiah when converted back. Let's run the actual numbers. 100 million rupiah invested 3 years ago. Path A, split equally across the IDX top 5. Dividends received, roughly 21 million rupiah cumulative. But the stock value fell to around 70 million. Portfolio today, about 91 million rupiah. A small loss after 3 years. Path B, split 50-50 between SCHD and VYM. USD total return averaged 33%, plus currency tailwind of 22%, plus reinvested dividends. The portfolio today, in rupiah terms, is worth roughly 170 to 180 million rupiah. Same starting capital, same 3 years. One path lost money, the other nearly doubled. Now, past performance does not predict future performance. The rupiah could strengthen tomorrow. US markets could correct. But the asymmetry of the last 3 years is striking enough that every Indonesian late starter needs to understand why it happened. So the obvious conclusion is, just put everything in SCHD and VYM, right? Not so fast. Because there's a 32% tax trap on US dividends that nobody talks about in Indonesia. There's a 3-year capital lockup that can completely change your portfolio strategy. And the right mix between IDX and US ETFs depends entirely on one question. Do you need this dividend income to pay your actual bills in the next 12 months? Some late starters need cash flow today in rupiah. For them, the 32% tax on US dividends is a deal breaker. Other late starters have 10 years before retirement and just want their portfolio to grow. For them, US ETFs are the right answer. In V12b, coming next week, I'll show you exactly how to build your portfolio. 2 specific scenarios with exact allocation percentages, after-tax yield calculations, and the one honest question that tells you which one fits you. If you found today's data useful, please like and subscribe. Drop a comment telling me which side surprised you more, the IDX losses or the SCHD gains. And don't forget the free retirement calculator in the description. See you in V12b.